Alright everybody, this is November 5th, 2012, and I want to welcome you to the Forex update. And I apologize I haven't done one of these in the last few weeks, but we have been slammed busy going through a lot of changes in our Trade Advisor Pro system. And we're going to go through some of these pairs a little bit at a time to give you basically an update of what I'm seeing in the currency markets. So let's start with the Euro USD. This is a daily chart. And as you can see here, starting around, what day is this? July 25th, that the euro started strengthening against the US dollar pretty solidly. We had a nice strong trend moving up, and then it shot to a whole different level and just literally shot through the roof. And from there, though, the price has pretty much gone into a sideways motion for the last, let's see how many weeks this has been. Since September 15th, pretty much the last month and a half, about 7 weeks. And what we've seen here is prices really struggled between the 131.30 mark, slightly above 131.00. Tried to break through a few times, it's rejected, and this 129.00 mark. So this would have been a great channel. You know, if you've seen a lot of my other videos, that we have I talk about trading in channels a lot. And this has been in a solid channel, a solid range there for a little while. But one thing you want to notice here is this level here of support that was sitting here about 128.35 has been pretty solid here for a while. You can see even over here, as far as over here, price came all the way up to that level or close to it, and then rejected off, came down, rejected off, and at this point, price came down. I'm sure if you broke down this candle down to a different level, you'll see that price probably struggled there for a little bit. But here's what I'm looking at. You can see currently, if you zoom this in a little bit, that price for the last, since around the middle of October 18th, the euro has weakened against the US dollar and has continued to go down. Even when price continues to go up, you have pretty solid rejections. See how you have these wicks, the longer wicks. Rejection just keeps coming up. Try to go back up, came back down. Try to go back up. Serious rejection right there, which is a good indicator that this thing is ready to drive down even further. But here's what we're looking at here. This 128.35 level has been broken. And the reason the candle is yellow-orange because the market's still open at this point. In fact, this candle here in about 17 minutes is going to go is going to change. But price came all the way down, is now up to this level here, and it's broken this 128.35. So what I would be looking for is, you know that most of my trades are limit orders. I look looking for limit entries. Is I would be looking to sell this Euro USD at 128.35 level, and looking for it to continue to shoot down at least. Let's see what kind of key levels we have here. I guess right in this area here is some decent level, 127.00 mark. You can see that there's a level right around in this level here, around almost 126. So I would be looking for price to sell at 128.35, and for price to shoot down to 127 as a profit target, considering the fact that it's already broken down. It's broken down pretty strong. But one thing to look to is, even as I'm sending out this market update for the day, is one thing you need to really be careful about is the fact that tomorrow is the U.S. election day. Okay, so we have a lot of people that may be off work or leaving work or not spending as much time in the markets focusing on what's going on there. There could be a lot more jumpiness going on in the market because of how the economy will be affected based on who becomes president. So I want you to be careful tomorrow or even the next couple of days as you're trading. Take your pips early, close them out. You don't have to run for the entire shot on any of these trades. Okay, so just be very careful over the next couple of days as we're trading the markets. Alright, so here I am looking at the euro pound. Now, as you know from my previous videos, the euro pound since around July 23rd, it seems that date, July 23rd to July 25th, seems to be a serious changing point for the euro. But the euro has been strengthening pretty aggressively against the pound for quite some time, and you can see that it's pretty much followed this trend line. Didn't quite make it there, but it's been pretty solid on this trend line. Now you can see here that price has broken this trend line over the last day and a half, But one thing I'm looking at here, and this is where we got to be careful, is how far is this bad boy going to drop down? It still looks like it's solid in this trend line. It can very easily break back above this trend line, especially if you look at yesterday's candle close. We had a little bit of the rejection on this was a lot stronger than, even though the candle was still down, it went way down and then rejected. And then today it did the same thing. It had a serious rejection by looking but you can see this huge pin bar reversal. In fact, in the next 15 minutes, this thing is about to turn again. Let me break down to a 4-hour chart. This is a daily chart. So let's look at a 4-hour chart and let's see what today looks like. All right, kind of get an idea of what this thing is potentially doing. Let's see here. What's today? The 5th. Okay, so the 5th started here. So let's see what price action did today. Price started here in the morning, broke down a little bit. It hasn't really had a lot of movement, but you can see that price is moving, slowly taking its way back up. We're not seeing a real lot there. Maybe on an hourly chart we'll see a little bit more of what price has been doing. Not really. Price came down. Let's see here. When is the 5th starting? Right around in here. Okay, so price dropped down, is slowly working its way back up to this level. Again, back to the daily chart. This is it could go either way at this point. I mean, at this point, it's broken the trend line, but I do like this pin bar reversal. What I'm going to be looking for is if price can break through. Now, I'm live in this trade right now for a short-term scalp. I'm looking for about 30 pips on this scalp. So what I would really like to see is price on the euro pound to break this trend line and continue its way back into this little wavy cycle. Okay. All right. So here I'm looking at the pound dollar, and guys, as I'm doing this analysis, I'm doing this live. So you're going to show me. I'm going to show you step by step how I look at the market. Okay. So I'm looking at the daily chart, and so first thing I want to look at, I'm going to actually pull down to the weekly chart on this thing. Oops, and let's break this down even we got to go deeper than that. Weekly, and then 3 over 3 year. Okay, so each one of these candles represents a week. Okay, and what you're looking for are patterns in the market. You're looking for support and resistance levels that the market is most likely going to react to. I cannot guarantee it. I always have people send us emails and say, "Hey, where's the USD CAD going to go?" Last time I checked, we're not really into doing the whole crystal ball type of service here, but nobody holds a crystal ball. Nobody knows where the market's going to go. Forex is a business of probabilities. I've said that before. You're looking for the best opportunities of potential on a trade, and so when you start looking at entries at key levels, number one, you're looking at where's the trend. Are we going up? Are we going down? Or is it going sideways? Personally, I enjoy sideways. Majority of traders actually hate sideways markets. I do the best on a sideways market. It's easier to trade, in my opinion. But if it's not going sideways, you're looking for the trend, and your goal is to figure out which direction the market is moving, and then wait for an entry point. In fact, I talked about this in the video series Forex Trading for Beginners. It's on our website. That man, we don't want to jump into a trade. You have to find a solid entry level to get into a trade. So let's kind of analyze and figure out what we're looking at here. So the first thing I'd like to do is look at the weekly chart and start looking at key levels that price seems to reject off of strongly. Now here's one. Now how do I know that? Well, it's not too difficult. You can see right here that when price tried to come back up, it rejected off of that. Came back up. See how I hesitate in this area? Now, when you're on a weekly chart, this is a couple hundred pips, okay? But it rejected, came down, struggled right there. See it? The wick. And when it finally broke through, look at it, came right down and bounced back off, bounced back off, bounced. This is a massive support level. 153.47 is a seriously strong key level. Right now, priced at 159.76. So we're talking about 600 pips before we would buy. So that could be weeks, months. Honestly, that looks like several months. If price continues to move down, we're looking at several months. But what we're looking at is the big picture. I'm not trading off the weekly charts. What I'm doing is gathering data off the weekly charts. So I know that if price came all the way back down to this level, I'd be looking for a good buy opportunity because at least it would have a couple hundred pip bounce. Okay, so This is a strong level right here. Obviously, we have some rejection right there. Right there, look, bounce, bounce. You can see it went sideways in a sideways channel. This is a great opportunity to trade in here. Bounce, see how price just stayed at that level, bounced over here, went and rejected, came back down. So 162.74 is obviously a very strong level. In fact, it's tested that recently, which is great. 62.74. Now that would be an excellent. That was a little over a month and a half ago. That would be a great place to sell. However, if you look here, now that we're getting some support and resistance levels drawn out, let's draw one more. This 1.6 level. In fact, let's set the value. You can see right where this is at. 1.6000 on the pound. Now you can see this. See how it hesitated, tried to break through, rejected. When you see these wicks, that means price came down right here on this candle here. Price came down all the way to 58.38, and I had to break down to a lower level time frame to find out if it happened in a day or if it took over the rest of the week. But you can see it came down that level and then rejected. Tried it again, rejected again, shot back up. Finally did break through, and it always will. No level can be is unbreakable. But look, when price came back up, massive rejection. Right there, hesitated, it broke through, rejected, came down for a couple of days, then shot up. When it finally broke through, bam, it did for a couple of days, came back through, hesitate, went into a sideways channel. Right, but right here, this area here, excellent opportunity to trade. I would have, once it got into that channel, pretty solid, I would have bought, sold over and over again on this trade. Kept some nice stops down in this level, up in this level. Finally broke into another channel and came back down, and you can see that. But look at this. You can see where price is rejected off of that level, off of this level, right? Now, even though the rejection was not strong here, it's still a rejection. So we're looking at this as a key. Now, here's a point. Price right now just broke through the 59.77. I mean the 1.6000 level. Now here's what we don't know. Is this thing is that a complete break? This is the rest of today's candle, which is about to close. And the fact that this candle was so small as compared to this candle, like see how strong these big candles are? This is definitive. The market saying down, down, down you go. Okay, because there was nothing, if you look at this between 53.50 is what that really is, and that level there, once you've broken through that level, there's nowhere for it to go but all the way down, and then all the way back up, and then once it's broken through, look, all the way down, all the way back up, all the way down, all the way back up. So here's where we're at with this pair, and this is something to keep an eye on. We have to determine by watching this, okay, if price, because you can see when price is broken down through, like even just recently, a couple weeks ago, when it did break through, it rejected and came back up. Okay, what we needed to is to figure out, and the only way you can do that is watch the market, watch price. Is this going to reject and then close out and start going back up into this little sideways channel between 1.6000 and 1.6274? Or is this the beginning, this little down move over the last month and a half, of a bigger channel, and we're going to see price drive down through? Now here's the deal. If price breaks down into this level here, which is, the 158-ish area, 158.50, I would be looking to sell this pair. Now what happens if price does break down there? Well, we need to figure out where we're going to enter. Now price could just go straight down, and then we don't have an entry. I do not like getting in at no man's land. If price is going, you don't sell in here, because you have to put a stop at a protective level up in this area. You're going to have a 300 pip stop. What I would do is, if price came down deeper into this level, is I would wait for it to retrace back up, and then sell here at the 1.6000 mark, and then we look for a 650 pip rundown, and that would be kick butt. So that's what I'm going to be looking for the next couple of days. I'm hoping price continues going down and shows the signs of pound weakness against the dollar, so that we can look for an entry to sell at 159.60. And I think that's where this thing's going. I can see the pound has gone up, and it cannot go up forever, guys. It just can't. And this was such a strong move up. There comes a point to the market gasses out. When we're seeing price move like this, what happens is the buyers, the bulls, are winning against the bears, the people that are selling. And there comes a point to where there's not enough buying pressure to push this thing up any further. And ultimately, people start either closing positions, which means this lack of buyers that are willing to push the pound dollar up, or the sellers start moving in and looking for opportunities to go short. So I think we're seeing a combination of both. Personally, I think we're going to see this pair break down even further. But since we are right on the edge of election day, a lot of that's going to make a big difference. I think if the U.S. economy is seeing an outlook after the election that hey, the U.S. economy is about to do great things, then we'll see strengthening of the U.S. dollar against the pound, and I think we'll see a nice run down. We could see it thing pushed down. I would look for a bounce back up on some news announcement or any opportunity we can to take a sell position up in this area and ride this sucker down for 650 pips, which obviously you can see we're talking about multiple weeks. This could be months. This is the weekly chart. Now, let's take this to the daily chart and see what this looks like a little bit. Now, this is scrunched up, but right now we're just looking for key support levels. Now, this is almost the same data as you're looking at weekly, but it's just scrounged down. So it's daily instead of every candle being 7 days. Every one of these candles is 1 day. But you can see all these main support levels are there, and we're right at a key support level. So what we don't know is price is coming down, it's going to shoot back up, or if we're going to see a rejection. Now, I just paused the video for a second here, and I wanted to add a couple lines in here, and I'm going to zoom this in and show you a little bit more detailed on what I'm looking at here. So, and I get a lot of questions where customers are asking, how do we tell what market direction it's going in, where, how do you determine the trend? So here's what I did. I drew out some lines, and you can see here that what's the trend from here to here. It's obviously up, right? It's not difficult. But how do you know in between whether the trend is going up? Now, here's a sign of looking for it. You want to look for higher highs. If on an uptrend, you want to look for higher highs and higher lows. So you can see that we had a strong rejection. This is a pin bar candlestick pattern, strong rejection. There's a small one there, but those are here. See one here, see rejection. And so, first of all, we saw a strong rejection. So I was looking at, okay, we have a potential, at least an uptick for a while, but price went up to this level, to this high, down to this level, down to this high, down to this level, down to this high, down to this level, up to this high. Now let's look at this. Let's look at two things. Number one, if you look from here, I could actually pull this trend line deeper. It's pretty much, this is not the greatest drawn trend line, but for the most part, I need to redraw this thing out, but for the most part, you can see that this thing is squeezing its way up. The lows, when it drops down to its lowest level, are getting higher and higher and higher. Okay, that is an uptrending market. Now, usually you'll see higher highs. Now, if you don't see higher highs, be careful. You can see here that we have a couple key levels here. That price was holding at this level and a little bit lower, even in here. But price has come up to this level, continue moving its way up, hit that level again, rejected, working its way up. When you see that, you can see that price is squeezing its way in between these levels, and eventually you get a pop. Now, here's what I would have done. I would have waited on this trade until it broke above the trend, or I would have actually bought several times on this trend. If I would have seen this price hitting here and hitting here, I would have waited until price came down, hit the trend line, put my stop down to this level, or actually past the previous low, and waited for price to go back up. And then what I would have done, I would have closed my profit up in this area here. Then what I would have done is waited for price to break this high that it continued to hammer against, which it did. It broke. Once it broke, I would have already been looking for a position, an opportunity to buy this pair right back on there again. And as you can see what happened, price came down, hit. I would have put my stop down this level here, and price shot back up. Now, you can see the opposite on the way down. We're working our way into a downtrend. You see this high, strong pin bar rejection. High, low. I guess you could say that. Low. The next high is lower than the previous high, down to a low, which is lower than the previous low. high, which is lower, low, high, low. You see it like a stair step. Boom, 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 boom. See how it's working? That is a downtrending market. Now, what we do see now is the last couple of days, it's almost doing the opposite. Okay? What this is, I'm looking at potential retracement. It's kind of been in a sideways channel for the last couple of weeks. And now price is broken down below this huge key level of 16000. Now, what I'm looking for, I think long term this thing's going to drive down. I'd be looking to sell this pair here, but because of tomorrow's elections, again, be very careful. But if this price does continue to show weakness against US dollar, the pound does, I'd be looking to sell around 1600, put your stop, a nice safe level up here. And then this pair, you should at least close a little bit of profit at 15900. If it continues going south, I would close a little bit more here, and then you just continue writing it down. So anyway, that's it for today. I know I didn't show a lot of pairs, but I wanted to explain a little bit more in depth about how we look at the market, especially how we determine trends. Okay, and we'll talk to you later.